Estate Edge. Our guest today is Jon Kleven, Monarch Commercial Capital. Hi, Jon. Thank you for joining us.
Hi, thanks for having me.
Jon, when did you first become interested in commercial lending?
So back in 2005, I actually worked for a residential lender, and I got the opportunity to work for a commercial real estate broker, finance broker.
Mm-hmm.
So I worked at marketing, and he kind of whet my appetite. And actually, I was going to go to medical school, so I moved to Utah to go to medical school, and that commercial real estate broker got me a job at a big bank here.
Really?
So that's where, and then I got into banking, commercial real estate financing, and that's kind of where
That's quite a transition from medical school to financing commercial projects. When did you start Commercial Capital or Monarch Commercial Capital?
In 2016. So I'm coming up on my 5th year with Monarch Commercial Capital.
How long were you a commercial lender before you kind of broke out on your own?
About 15 years. So I worked at a big bank as an underwriter. I was an analyst, a loan officer, a problem loan officer, which meant I had to work out solutions with delinquent loans, portfolio manager. So I got to see a lot of the aspects, the internal aspects of the bank, different way you underwrite, how they weigh risk. And then from there, our group was transplanted into another group that wanted to do commercial real estate financing. So they brought us on as kind of a boutique broker, banker arm. So I was there for a couple of years, and then I went on to a company that was strictly brokerage. So I went there and brokered loans, and after a while, I just thought, I'm ready to do it on my own.
So you had a solid background in commercial lending before starting Monarch. What was your motivation? Why break out on your own?
I did it too late. I should have done it sooner. There was two main primary reasons for doing it. One was from a practical standpoint. I liked having more options. Mm-hmm. Having a tight credit box, each bank has their own standards and guidelines. And as a broker, you can use all banks, so you have a broader brush. The other aspect is from a satisfaction standpoint. A lot of times things were transactional at a bank or even at the brokerage I was with. Going out on my own, I'm able to have a longer lasting relationship, more of an advocate, and just higher job satisfaction being able to work with clients directly like that.
How does one become a commercial loan broker? What are the qualifications? Obviously, you were well qualified with a strong background, but perhaps that may not apply to all interested parties. How do you make that transition?
So it's unfortunately and fortunately, the bar is very low. There are a few states that require a commercial brokerage license. When I say few, there's 3 or 4. Mm-hmm. But as far as requirements, if you've got a deal and a bank wants to look at it, I mean, that's the bare minimum. But that won't get you very far. So as far as what I think you actually need is an understanding of how cash flow works, an understanding of how banks work, and the ability to know the different loan products. So there are a lot of brokers that specialize in smaller loans, and every once in a while we'll try to do a commercial real estate loan, and it just doesn't go as smoothly because they don't know who to approach and they're too wide of a brush. So,
of those 2 or 3 states, is Utah one of them?
No.
You have to be licensed in Utah?
Utah is not.
But only for a residential loan broker. You have
Correct.
to be licensed, but not for a commercial.
Correct.
From the client standpoint, what's the difference between working with a commercial loan broker and a direct lender? What are some of the nuances?
First thing would be responsiveness. Banks are busy. They're layered. They're kind of compartmentalized, where you'll have a salesman up front or a loan officer that helps you structure the deal. Then you'll go to an underwriter that helps the underwriting, the questions, and then it'll go to a loan processor, and then it'll go to a loan closer. Having a broker involved, you've got a consistent contact from start to finish. Not to mention a broker, we're not doing our job if we're slowing down the process. So we have to be far more responsive than a bank.
Sure.
So as far as a bar, and then the other thing is some banks specialize in, let's say, conventional loans. Some are better with SBA 7A loans. Some are better with SBA 504. Some offer all 3. So by going directly to a lender, you may be limited in what they can offer. Whereas a broker, I can assess the file, take a look at it, look at options, discuss the pros and cons, and find the right fit as opposed to steer them towards a product that a particular bank may offer.
As a broker, do you fund the transaction?
No.
Strictly the bank's funds or whoever the lender is.
Correct. The closest I come to it is occasionally a bridge loan, but I still don't fund that. I'll connect them to a short-term capital
Okay.
while we work on the long-term financing.
Again, from the borrower standpoint, what are some of the benefits of dealing with a broker versus a bank or insurance company or credit union?
So I would say options. Options is probably number one. You have different loan options. Some banks are limited on loan to value, so you may go to a bank and they're limited to 65% loan to value. You go to a different bank, they'll do 75. Maybe you'll find 80.
Mm-hmm.
So from that perspective, options is huge. The other
Indeed, it
one
would be.
the other one is, a relationship. So I have relationships with my lenders. So if I bring them a deal and they don't execute, they know there's a higher level of accountability to maintain a relationship with me than it would be a one-off deal.
Mm-hmm.
So I would say the other thing is network is a little more extensive, a little more stronger relationships. Now, if you have a bank that has $400,000 in the bank and you've got a portfolio manager that calls you once a month, they're probably
Sure.
a better bet. But aside from that, a broker will allow you to assess your options.
Are there certain type of commercial loans that you prefer to do in a perfect world?
Yes, I love doing SBA owner-occupied deals, and the reason being, for a business owner occupying a building, a bank gets an insight into the cash flow of the business.
Mm-hmm.
Compare that to multifamily, compare that to retail. They get to see the lease, but they don't know the income of the people in the residential world in multifamily. If it's an office building or if it's a retail, they don't necessarily know the financials of the tenants. So from a lending standpoint, lenders like to see owner user properties because they get an insight into the actual cash flow.
Sure.
So those I like because they're maybe easier to do.
I was just going to ask: Are they easier? Are they faster? Are they funded
They're
more
slow.
expeditiously?
They're
Oh, they are
slower.
Because of the SBA feature.
Because of the SBA feature,
Okay.
yes. So banks do like that better. For investment properties are an easier underwrite. You underwrite the lease, you look at who the tenants are, you look at the borrowers as kind of the secondary source of income.
Mm-hmm.
When you're looking at owner occupied, you're looking at the business, you're looking at the balance sheet, you're looking at the ARs, the aging report. And then on top of that, the SBA offers a big subsidy to banks, whether it's 504 or 7A. They take a lot of the risk off of the bank, so they can still have a secured by the real estate, a good position where if things go bad, they're not as at risk as they would be with an investment property where they don't have that additional guarantee.
Well, based on your comment, can you kind of compare the challenge associated with financing a couple of different types of property? Let's say retail versus multifamily, just as an example. And assuming that neither of those are SBA related, is one more difficult than the other to find financing for?
Really the focal point comes down to whether it's owner occupied or investor.
Okay.
What income is generated from the property? So in the term of multifamily, they'll get historical years of gross revenues and expenses,
Mm-hmm.
and then a rent roll. In terms of a retail, they'll get a rent roll, which is maybe 3 or 4 tenants, the lease terms and when they expire. And so in general, I would say retail is harder than multifamily because multifamily, the turnover, the vacancy ratio is much less. Retail, you're dependent on a couple tenants and you can't see their financials, and so it's a little more challenging with retail.
Sure.
But in general, you look at the historical cash flow, you see how long they've been there. Banks can get comfortable with that, especially once they also assess the secondary support from the owner, which would be their outside income and all that. So
Sure. As in most commercial loans, you look at the NOI, the net operating income, and that sort of justifies the level of loan, the LTV, et cetera.
yeah.
If you mentioned, we talked about retail for a moment. Has retail been more difficult because of the virus? Has that created a greater financing challenge?
So I haven't seen that specifically. I've got to imagine it will,
Mm-hmm.
to some extent. But I also think there's also commercial real estate brokers that are creative in ways to fill it. But essentially, it'll come down to who's the tenant, how long is the lease good for.
Sure.
Some of the leases out there, like Walgreens are corporate guaranteed. And so even if the tenant vacates, you're guaranteed payments for the length of the lease. So in that aspect, a lot of it will come down to who are the tenants. And if it's a big strip center with an anchor tenant that maybe publicly you can see their financials aren't great, that could have an issue.
Sure. I guess I was thinking of the impact of COVID on restaurants, coffee shops, some of the small retailers that the virus has impacted dramatically.
So right now there are some stimulus options for them. So there were any business owner that had an SBA loan got 6 months of free payments. They got the EIDL loan.
When you say free, do they have to make that up at any time?
So good question. So if it's an SBA loan, the SBA makes it directly to the bank and it is forgiven. So
I
they
see.
don't, it's not deferred.
It's a great deal.
Yeah, so they did that for 6 months on any SBA loan existing, on any SBA loan originated. They have now renewed it, and there are 3 months of payment forgiveness for new SBA loans. Plus, there's PPP that went to the small business owners. EIDL was a loan that was available to them. And so I guess what I'm trying to say is I think it's too early to tell because there's been money buoying up these small businesses.
John, do you get involved in commercial construction financing? Is that an area that you pursue?
Not as frequently. There are a lot of times where a business owner, rather than find a property, wants to buy land and build his own building the way he likes. That I do quite frequently. Where a developer or an investor wants to build a ground-up construction retail strip center, those are a little harder to do. And those are probably more relationship-based and based more on a local level, a banking relationship level. Developers have relationships with bankers, and so I don't typically get involved on that side of things.
Do you have a typical transaction size, a typical dollar size or a range that sort of fits into your portfolio?
So I deal with the smaller balance loans. I'll go as low as $250,000 up to around 10 million, but in reality I'm probably closer to 250,000 to
Quite a few
4 to
zeros.
5 million. Yeah. So, and I'll get involved in it if there's someone I really have a strong relationship and they come with me with a lower loan request, I'll try and get it done. But once you get in that smaller loan amount, my relationships don't want to spend time on the below 250,000. So that's when I start calling random banks and trying to expand the network.
Do you find it easier to deal with banks, credit unions, insurance companies, mortgage brokers? Is there a kind of a path of least resistance, or does it just depend on the transaction?
Depends on the transaction, I'd say. A lot of banks, and even the big bank I was with, I call it driving with looking in the rearview mirror. You know, whatever burned them in the past.
Of course.
They may be hesitant, or maybe they have a high concentration in their portfolio. So I would say as far as it goes, it just depends on their appetite, their box. And
I can relate to that as a former commercial banker. That's a good analogy, kind of driving and looking in the rearview mirror. John, how would you describe today's market? Is there adequate capital to support demand?
Yes. Their demand right now is at an all-time high, which is impressive, maybe surprising to me.
It is surprising.
So banks are slammed. SBA is slammed. So rates are at all-time lows with the SBA. SBA is offering that payment forgiveness I mentioned earlier. There are other perks where SBA is waiving guarantee fees. So as far as financing is concerned, banks are, if anything's limiting, it's resources to get the deals
Process.
to the finish line right now.
Would you go as far to say there is a lender for every loan in today's market, or is that a little stretch?
I think there's a needle in the haystack for everyone, but that needle can be really hard to find. Yeah. So for me, I work with probably 80 to 100 lenders nationwide, regionally, locally, nationwide. And if you're getting a similar response from, first off, I'll review it and do the cash flow and see so what I focus on are what's going to kill the deal? What are the weaknesses? Can I address those with the bank? And when every bank I talk to has the same feedback, at some point you're really looking for that needle in the haystack. And,
Sure.
And with financing deadlines, contingency deadlines, it's at some point you're not going to find it.
Well, you sort of addressed my next question already, and that's geographically, what is your market? It sounds like it's throughout the country, not just Utah.
Yes, so I will go nationwide. A lot of that has to do with some of my background and the network I have nationwide. But yeah, I can lend nationwide, and then states that need licenses, I have a path to license through that through an affiliate.
Are deals in other states easier to do or harder to do just because of the distance?
I would say, I wouldn't say they're harder, but I would say I certainly have more relationships in the state of Utah than
It
nationwide.
sounds like the key is really the relationship. Do they know you? Have they had experience with you in the past?
Yeah,
I
and
can
do I
certainly
trust them,
appreciate that.
right? So
Oh, of course.
this second round of PPP, for example, I haven't gotten too involved because the banks I knew that were doing it really kind of closed the doors or at least limit it to their customers. And I'm not going to take somebody's future and sling it at a chance.
Understand. What's the biggest deal you've ever worked on?
It was about 4.2 million. It was a ground up construction, going back to your construction comment. It's actually a banquet hall. They were operating out of a smaller facility, kind of a rundown facility. They built this immaculate banquet hall. It's actually back east too. So, so when you're doing a construction loan, they look at the cost and they do an appraisal as complete, and their cost exceeded the value, so we had to cut it back a little bit. Otherwise, I could have hit the 5 million mark.
No kidding. Well, you mentioned appraisals. Has there been any changes recently regarding the appraisal threshold? Is it still 250,000 that a bank would require an appraisal, or has that changed?
I believe banks can modify that as they go. Most banks will do a drive-by or an internal appraisal on those smaller loans.
I see.
The SBA, and I actually don't know the exact number, but they have raised the dollar amount that they require an appraisal.
Sure.
Banks will typically still have one, but it won't have to go through a separate review with the SBA.
Sure. Well, that's kind of a moving target anyway, isn't it? From lender to lender, deal to deal.
Yeah.
Who pays for your services, John?
So what I do, I have banks that'll pay me, but I typically will charge an origination fee, and I'll waive it if a bank pays me.
Okay.
I find
so
that
either the bank or the borrower, one of those two.
Yeah, I find if I don't do that, I'm working for the banks. So if I know I'm covered, it allows me to access different banks, knowing that it's irrelevant which one
Sure.
I place it with.
How do you go about marketing your service? It sounds like you're so well established that that's not maybe a big part of your process. But how do you tell the world about Monarch?
That's a good question. Historically, I did some email campaigns, but I've just been in it long enough that it's really primarily word of mouth. I am working to figure out if there's a better way to do it. As far as I don't think anything's better than word of mouth and referrals.
Sure,
But
referral is absolutely the best and least expensive too.
yes, so it's repeat customers. It's customers that had a good transaction with me. It's franchises where I've been able to finance some of their franchisees, and so they send it to me or they refer them to me. It's commercial real estate brokers that have somebody go under contract. They don't want to deal with the financing side of things, so they have me take care of it. Residential loan officers may get a commercial request from a realtor, that was maybe got involved with the commercial transaction, goes to his residential guy, and he says, call John.
Sure.
So a lot of it's really word of mouth and referral.
That's the best there is. How do you decide which lender to go to? With that many referral sources, is that a difficult decision? What's the driver?
So I have in my head at least tiers, buckets, right? And so I'll get the financials from a client, I'll review it, and from that standpoint, I can see what tier I think it falls into. And then I weigh into things such as geographics, timing, deadlines. Sometimes you need a no-nonsense lender that's going to get it done. Sometimes you have the time to go through more rigorous approval process. So the things I weigh would be the overall strength of the deal, the issues in the deal. Some banks will be lower leverage. Some banks don't like special use properties like a gas station, car wash, hospitality. So I really have to take a good look at the file, assess it, and then at that point I've got my buckets that I can start approaching.
When an investor approaches you with a transaction, what do you want from them, at least initially, so that you can give them that cursory review and say yes or no in your own mind as to whether you want to spend your time going forward? What are some of the documentation requirements that you have up front?
So bare minimum, so if it's an investor, the one thing we're going to want is the property itself. What the primary focus in underwriting is going to be, what kind of income does the property generate?
Sure.
So in that case, if it's a retail center, send me a rent roll. We want to know who the tenants are. Next level would be, give me historical profit and loss or historical tax returns so we can see the actual cash flow. Then the next step would be, let me see your financials as an investor. If you're really strong as an investor, you might be able to leap in priority of focus, where I've done some where the property was vacant, but the buyer was a commercial real estate broker, good financials, know how to lease up a property, and so it had less relevance. So, but certainly the primary focus is on the real estate and
Sure.
the income generated
So
from
one
it.
of the first things you want to see is the NOI, see what kind of cash flow is generating. And as we both know, cash flow is anything that makes the payment.
Yes.
How long does it take to get a deal funded?
Depends on the deal. I would say if I'm telling somebody an average, and this is maybe a little aggressive, 6 to 8 weeks. You could maybe get it 4 to 6 on a conventional loan, but if you're structuring a purchase and you're only given 6 weeks, there's a very high likelihood you're going to be asking the seller for an extension. So 6 to 8 weeks is what I typically say. By 6 weeks, you'd certainly have the loan approved, the appraisal in. It's a matter of, can you close it out in time?
Sure.
And a 504, obviously, it takes longer.
Longer. What is there one specific issue that will expedite that? For example, if the borrower investor comes to you with all the documentation, which probably seldom happens, is that going to expedite the transaction versus kind of piecemealing the information to you?
Yes. So the one exception I do have with that is when a bank declines a loan and they have an appraisal, the whole file, and they send it over to me. That automatically cuts down that timeline. But assuming you're starting from scratch, the best thing you can do is, and it's a little bit of a financial risk, most banks will underwrite the loan, get it approved, then order an appraisal. Well, if you can order the appraisal right away during the underwrite, those two timelines are now overlapping, and that's a way to kind of shut.
How long does it take to get a commercial appraisal today?
2 to 3 weeks. I've seen 4 weeks in more rural areas, but in general, it's probably 2 to 3 weeks.
I would imagine the larger the facility, the further out it, as you said, location. All those things play into it, I guess.
Yeah. And so banks will do what's called blind bids, and you know about this, I'm sure. But basically, they just send out, here's the property we need appraised, here's the specs, and they get bids back from appraisers. And so some of it will depend on how busy an appraiser is.
Sure.
An appraiser that gets that bid may say, I can do it in 2 weeks because I'm slow right now. Or some may look at it and say, I've got to travel, so I'm going to say 4 weeks. And so there's a lot of different variables.
Understand. When a deal is turned down, what do? Do you just say, well, that's the way the world turns? Or do you re-examine it, re-evaluate it, try to modify it somewhat, and take it to another lender?
The latter. So I typically, first off, before I approach lenders, I will say to my client, this is a long shot. I'll try my best. I'm not going to guarantee anything. Feel free to explore on your own as well. And let's just be open communication about it. But the other thing is, so if I see a loan is in with a bank, and this is going back to broker versus banker, if I start seeing they're asking questions that you can tell there's serious doubt or credit concerns, when I say credit, I don't mean credit score, but maybe
Sure.
cash flow or whatever.
Understand.
I can immediately reach out to another lender, let them know the situation. I have a full file. I can get it started there and kind of put them on backup.
Sure.
So if it's a deal that is the needle in a haystack, then at some point you've got to call it. But I typically won't get it in with a bank until that point.
Sure.
And
Would you normally submit the same transaction, same loan request to multiple banks, or is it one bank at a time?
so it's a few banks, and I got to be careful if bankers are watching this. I will never just blast it out. I think there's a misperception that I've got 80 lenders that are all going to review a deal. I've been a lender. If you see deals that never come back into you, you don't give them credibility. You don't take the time of day. So
Yes.
I have those tiers, those buckets. I know who can do what, and so I start there. I start with the ones that are highest likelihood, and then if I see issues, I kind of expand out until I find the right one.
Would you care to tell us what your approval percentage rate is?
100%.
Perfect. Doesn't
No.
get any better than that.
No, I would say so. What I'll tell my borrower, I'm very conservative in my estimate. Until a loan funds, I won't say 100%.
Okay.
I'm not going to say 100% until it's there. But once I have a lender, especially one that I have a good relationship with, that offers an initial LOI, letter of intent, I put that at 75% that gets done. The remaining 25%, maybe 5% of that is me being overly cautious. And the other one is a skeleton may pop up. For example, I just had a loan submitted to a lender. They started the underwrite. They Googled one of the borrower's name, and it came up criminal case. That deal was dead.
Shot that deal down.
Yeah. So those things pop up. But in general, if I've done the cash flow, my lenders I trust have done the cash flow. They ran it up the flagpole. It's.
Would it have helped if you would have known about this issue with the borrower and brought that out to the lender in advance and saying, one of our borrowers has an experience that they are not proud of, but we want you to know about that in advance? Would that have helped that deal?
That is the key to being a mortgage broker.
So disclosure and communications is really key.
If you hide from the difficult parts of a deal, you're doing yourself, you're doing the clients, you're doing the lender a disservice. It's much better off, especially if you have a trusted lender, to say, here's the issue. I need you to be okay with this today. And sometimes there's still a subjective call. But in that case, I was told one story. I actually got a letter of explanation that I submitted with the deal on just a Google search. So I missed this. A Google search, the whole different story popped up. And so that's the other thing. I tell my clients, look, I am like your financial attorney. You need to tell me problems so I can see if there's a solution before they pop up. And in this case, you said it was something else and it clearly wasn't.
Sure.
Then you're backpedaling and you can't do anything about it.
What would you say is the most unique transaction you've ever worked on? Now, you mentioned the $4 million plus transaction. Is there anything else that's truly unique, maybe a special purpose property that gave you challenges?
So my favorite one ever, a guy who bred dogs, and he always wanted to ask the golf course if he could rent out space to train his dogs. So he'd breed the dogs.
On the golf course?
Yes.
Okay.
Obviously, a golf course owner is not going to want dogs running all over his grooms.
No, probably not.
No. So, but the golf course stopped performing. He purchased the golf course, fenced off some of the holes, had the water hazards to teach the dogs to swim, had golf carts to ride them and train them. And so he ended up taking a very special use property, a golf course, a dog groomer, and put them together to create.
And repurposed it. That is very unique. Was that here in Utah by chance?
No, it was not.
Another state.
Yeah.
Very interesting. Once a loan is funded, do you have any involvement after that, or is your job done at that point?
For the most part, it's done. However, banks, especially big banks, can be hard to get a hold of somebody. So I just had somebody say, hey, who was the contact at this bank again? And I gave them the contact information.
Okay.
Or, hey, we need to know what we're doing with our equipment money or our construction funds. And so I stay tied in as much as I can. If I see any, like when the PPP popped up, I let my prior borrowers know. So I still maintain a point of contact, but at that point, they're better off
For the most
going
part, you're done.
directly.
When a bank funds a commercial real estate transaction, do they keep it in their portfolio generally, or do they sell it? What's been your experience?
So commercial loans are really considered what's called sticky assets, which is a commercial lender makes a loan, it stays on their books. And so there are ways they're very prudent as far as do we want this loan on our books, and we kind of talked about some of them, property type. A lot of banks will actually put a maturity date prior to the full term, so they can reassess a relationship in 10 years.
So with a balloon payment.
Correct.
If they are going to sell the loan, if they do not want it in their portfolio, who would they sell it to? Secondary market investors, but who might that be?
So there are banks that they actually have a price sheet, they're wholesale lenders, where they will actually give lenders their lending criteria. If lenders book a loan under those criteria, they'll look at purchasing it. That's a very rare model.
I see.
It does exist.
And then would they pool these loans and sell them, securitize them, and then sell them in the capital markets? Or?
No, they'll still be portfolio-based loans.
I see.
There are some with 7A where, are you familiar with 7A loans?
I am,
Okay,
yes.
so bank makes a loan, there's a certain percentage that's guaranteed by the SBA. Banks will pool up that guaranteed portion and sell those off to investors, which reduces the balance on their portfolio, gives them a quick pop for some income on it.
Liquidity.
So that is more common than a portfolio loan being sold.
How about Fannie or Freddie? Do they participate? Do they buy commercial loans?
So they are big in the multifamily market, and they do purchase loans. That I'm not as in depth with that type of lending.
But it's an option.
Yes.
That a bank is capable of selling either one or multiple loans to Fannie or Freddie or other members of the secondary market.
Yes.
And that the benefit to that is what? Liquidity?
Liquidity, yeah. So
keeps the dollars flowing
and reduce the balance on your portfolio, allow you to lend out again. So so with that, I did participate at some point in loan acquisitions as a banker. These were primarily when a bank went under, the FDIC seized the assets, sold them to investors. We had a group that would actually buy them from investors and put them on our portfolio. And then we had the ability to refinance them out elsewhere. So that's maybe a more creative way of assets being sold. But for the most part, I would say commercial lenders have these sticky assets that stay on their books.
I like that term, sticky assets. Well, John, we have just a couple of more minutes remaining. I want to ask you about interest rates. It seems like rates are extremely low and have been for quite some time. What's going to happen in 2021 and 22? Rates going to stay at the same level, do you think, or are we going to see increases?
What's your take on a recession? Can I ask you that?
Well, you can certainly ask me.
So if a recession is coming, I don't think they have the ability to rise. With things that are going on, I know the feds have talked about not increasing the federal interest reserve rate. So I think that will help maintain lower rates. The SBA 504 loan, which is the government-backed loan for owner users, it hit historical lows. I think it dropped to a 25-year fixed at 2.26, I think was the lowest it got. It's up at 2.71 right now. So it's slowly crept up. But for the most part, I think a year, given the way COVID has had an impact, the way money's going out towards PPP and kind of the assistance, I don't see those rising anytime real soon. Or
I
at least not
understand
drastically.
that the London Interbank Offered Rate, commonly known as Libor, is going away at the end of 2021, meaning it will no longer be an acceptable index. I've also read that currently, worldwide, that represents about $200 trillion. What kind of impact is that going to have on the general financial community when this index that has been used for, 40, 50 years, all of a sudden goes away?
So I think banks will adjust. I mean, the short answer is banks that don't currently use it won't have much of an impact.
Sure.
Banks that are currently using it should heavily consider switching indexes, because the big question will be, when your rate does adjust, what does it adjust to, or how does it adjust? When I was at a bigger bank, we used Libor quite a bit, FHLB quite a bit. And so currently now what I'm seeing though, a lot of them are attached to the prime rate, Wall Street Journal prime rate. Some banks have internal rates where in fact if you call them and ask the rate, they have to wait for their internal interview internal email that comes that day that gives them the rate. So I would say as far as the banks I work with, there's a pretty broad spectrum of index.
So
they
you
use
don't
for rate.
anticipate it's going to be a major chaos and upheaval in the process?
My guess is worst case scenario, that rate adjusts. You maybe have to refinance them into a new loan.
Well, John, thank you so much. We greatly appreciate your time and your advice and counsel. We appreciate you being with us.
Thank you. Appreciate it. It's been great. Thanks for having me.
Today's program was brought to you by Stringham Schools, an Ambition company, educating real estate professionals since 1989. Visit stringhamschools.com for more information. And don't forget to tell us what you think about the program in the comments section below. I'm Gary Barnes, and I'll see you next time on Stringham Real Estate Edge.